Welcome to another Tax Talker. Thanks for clicking. I always appreciate it. Today we're tackling what actually is taxable income. What am I reporting on my return? Some things you'd never expect to get taxed, they are, and other things I get asked about every year and they're not part of income at all. We'll cover a number of items that trip people up, and if you're on autopilot mode or your software is or your accountant is, they're easy to miss. We'll cover a few obvious ones right off the bat, starting with your side hustle income. I think most people know when you're making a good amount of money on a side hustle, you're driving for Uber, you're walking dogs, yeah, that's going to be reportable income. But I think where people get tripped up is, well, maybe a lot of it's coming in cash, or they just kind of are helping a neighbor on the side and it kind of spiraled. Technically, any cash or payments you receive for services rendered, that's a little side hustle business. I mean, you're entering in that to profit from your time, and that is reportable on your return. You hear people say, hey, I didn't get a 1099, or it was just cash, it's not reportable. That's not really true. I think we all have a different threshold in our mind for when it's enough hassle to pay attention to tell Uncle Sam about. What your accountant says might be different than what you feel is the right thing to do. But the important thing is income coming to you, at least know the risks. If you're receiving that cash and income, that is reportable to the IRS. And certainly if you're getting a 1099, don't just ignore it, because you're going to open up a problem. The IRS has computers that catch this. It's not that they have to audit you to catch it. An IRS computer will see that you had a 1099 issued to your social security number. Hey, here's income. We'll send you a notice. We don't see this on your return. And of course, if you have side hustle income, make sure to track your expenses. You got mileage associated, you buy supplies, those are all offsets to that income. On the flip side, if you're getting a 1099 from Venmo and PayPal, and we should see fewer of these, there was a threshold, they were lowering that threshold, now they've raised it back up. But if you're getting a 1099 and you're like, well, I was just reimbursing a friend, I was just getting reimbursed for restaurants. Maybe you just do a lot on Venmo, or maybe you're selling a lot of things, you're helping your parents clean out their house, you sold a ton of stuff via Venmo. Well, you're just getting reimbursed for expenses. You're recovering personal expenses that you've already paid for. So if you get a 1099 for that, it is proper to report it so you don't get that notice, but offset it with expenses to show there's not real income here. Another maybe more obvious category, prizes, awards, the lottery, that's all taxable income to you. It will almost certainly get reported on 1099 if it's of any substantial amount. The important thing to remember is if you're getting something that's not cash, you're going to get taxed on the fair market value of that. If you want a car, you want a really nice car, you're going to get taxed on the full value of that. And if you're holding on to the car, that means you got to come up with out of pocket enough to cover the tax. So it's good to be aware of what is getting reported to you under those circumstances. Gambling winnings, that's another one that's definitely taxable. The reporting thresholds are really low, so you get a W-2G is what reports that. And I think what trips a lot of people up is, okay, they had an up day from the casino, and so they got $800 on this W-2, and they're like, but I've spent way more than that at the casino over the course of a year. That is the kicker with gambling income. The income is reported on your return as above the line, and then you can deduct losses, but how much those losses will help you is going to depend on your situation, whether you're itemizing what your deductions are. And actually with the recent law change, they made it even a little worse for how much, and you're really never going to get a dollar for dollar offset from your losses. So check out my tax traps from the new tax bill video. Unemployment income. This was an item where during the pandemic, there was some temporary tax-free unemployment income, but that's not around anymore. There's a few states that still have that, but for the most part, certainly federally, unemployment income, that's taxable. You can have withholding taken out of it, but if you're not, remember you're gonna have to come out of pocket for that amount when you file your taxes. Debt forgiveness income. If you got out of some credit cards or got out of a car loan or anything, you're going to get a 1099-C for the cancellation of debt, and that is also reportable on your return. A couple weirder items, more obscure, but if you're bartering your services, if you do photography and you do that for someone in exchange for them helping you with the landscaping, Technically, those are fair market value of services, should be reported and exchanged there. In practice, probably not going to happen. And finally, if you did find that treasure chest in your basement with untold winnings, well, you actually have to tell them. You got to go tell the IRS about them. Any found money is income to you and should be reportable. Let's go to some items that are not quite just, yeah, they're taxable. Gifts and inheritance. This one's actually usually good news for taxpayers. You're really never paying federal income tax on a gift you receive or on an inheritance you received as the receiver of the gift or the inheritance. So if you got cash or got a house or got some stock, the amount that you received on that day of the gift or of the inheritance, that's not taxable income to you. It's important if you got something that's not cash that you figure out what the basis of that property is. Because if you go around and turn around and sell that stock or sell that house, you want to know what your basis is. If you hold that property and it is income producing like rental property, then of course you would start reporting that income. One area that can feel like an exception to this, though it's really not, is pre-tax retirement account. If you inherit an IRA or a 401k or 403b from someone, a pre-tax account, meaning non-Roth, that money, when it is distributed to you, as you take distributions from it, that is going to be ordinary income. Basically, as of the date you receive the inheritance, you're not getting taxed on that per se as an inheritance. It transfers over. You would open what's called an inherited IRA account, and it would hold those funds. In most cases, you would then have to start distributing those over a 10-year period. So as you take those, you would pull them into income in the same way as the decedent would have eventually paid income taxes on them if they had lived. So too do you have to do that now as you take distributions from them. Life insurance proceeds, that's rarely going to be taxable. Same with child support. If you're receiving payments, that is not taxable. Workers' comp, that's pretty much always tax exempt. If you're receiving any sort of disability payments, if those were paid for by you as after-tax premiums, then it's not taxable. But if your employer's paying it, it's going to be part of your wages. Scholarships, this is one I see people make mistakes on. For most people, they're not getting money. It's certainly for a 4-year degree. It's rare that you get that full ride. So scholarships up to the point of tuition and necessary fees for schooling, that's all tax exempt. But once you start getting a scholarship that's greater than your tuition and you're actually able to use that money for room and board or everyday living expenses, food, then that is taxable to you. That most common situation is someone going for a master's or a doctorate where they're receiving like fellowship income or scholarship income for their teaching time and whatnot. This should be reported on a W-2 without any payroll taxes. Sometimes I also see it reported on 1099 to people, but that will be reported on your tax return subject to income tax, but it should never be put on Schedule C as self-employment income. Even if you got a 1099, if this is scholarship income, it is not self-employment income. That's something that I see accountants and softwares get wrong. Moving right along, we have cryptocurrency. Crypto, for purposes of income tax, is going to operate very similar to a stock. When you're buying and holding, you're not reporting anything, and you're not taxed on the gains that are unrealized. The IRS is trying to hone in on people not reporting this stuff. You should answer yes to the question, did you buy, sell, or trade digital currency? So that you will have to say yes to. But then, of course, when you sell it, you need to report the proceeds and then what you bought it for, your basis. And our final item for today is Social Security. A lot of confusion around this, certainly with the new tax bill, no tax on Social Security. Nothing changed in the bill for Social Security. As we've covered in other videos, what's happening is people 65 or older will get an extra deduction, a $6,000 deduction. So it's an offset. But it could offset. Technically, you could be 65 and not get Social Security. You could have waited till full retirement age, which is around 68. Social Security benefits have always had a tax-free component. It just depends what the rest of your income is. So Social Security can be as low as 0% includable, but then as your income goes up, the amount included in your income of Social Security increases. And it's at a pretty low threshold for income, but it's up to 85%. On the state side, there are many states that don't tax Social Security or who tax it at a reduced rate. That is the tax talker for today. Bottom line, not all income is created equal. And it's always good to be thinking about these weird income items as you're aware of them throughout the year, rather than in February, you're expecting a big refund and then that question by TurboTax reminds you, or that 1099 you got in the mail reminds you. That's the time when it can be a big pain. So plan ahead now. If you found this helpful, be sure to like, subscribe, and leave a comment wondering what gray areas you want me to cover next on the tax bill or on anything else. Thanks for watching, guys.